Since we last met in October 2023, the main challenges confronting the global economy have not changed much. Suffice to say that many of the risks that we had identified are beginning to materialize. Importantly, inflation, which was seen as a huge policy challenge of the day at the time, at least for central banks, is very much still with us. It remains the overarching policy challenge today. Monetary authorities globally continue their efforts to bring inflation down and within targets. So inflation is turning out to have been stickier or more persistent than central banks initially thought, unless you are from Latin America, where central banks moved earlier and have been able to rein in inflation quicker than many central banks. As the Monetary Policy Committee, we remain resolute in fulfilling our primary mandate to maintain price stability in the interest of balance and sustainable growth. Our policy actions will always seek to anchor inflation and inflation expectations at or closer to the midpoint of our target band. The MPR is a very rich document in analysis and sets out the various challenges that we had to deal with as the MPC, and captures more than just the normal statement that you normally receive when we finish the MPC. I'm going to ask Dr. Chris Lowald, who is the head of research and the chief economist, to also take you through the presentation. He has got quite a number of slides. Don't get scared. He will go through the slides fairly quickly.
I will go through it quickly. As usual, a lot of what I have to say is stuff that you will know from watching the news and reading the papers on a regular basis, and listening to a lot of what we have to say over time. I'm going to talk about policy rate cuts and how they're being pushed back and scaled down with some of the implications of that. I'm going to talk a little bit about global growth and why it's better in 2023, but it's not particularly robust, and it's also diverging, which is a topic I won't go into in much length, but we might want to talk about later because it's interesting. This raises the interesting question, are positive real rates there? Sure, that's quite easy to measure, but are they doing their job, and are they tight enough? So do we have policy settings tight enough to actually get inflation down to where we want it to be? Again, a fairly complicated chart. I think the thing to take away here, above all else, is just simply that those triangles, those green and black triangles, show you that real rates sit at what look like relatively high levels, again, across a range of countries. The blue columns are just the intervals around estimates of neutral real rates for the different countries. So why might real rates not be as high as they ought to be? Well, one way of looking at it is to take a view of global demand and supply. You all know, of course, that the world has seen during the pandemic a series of really large shocks. These indices that we've used are just really proxies for global demand and supply. And the point that we're trying to make here is just simply that if you look at the start of the pandemic, 2020, running through to the beginning of 2023, that blue line, which is the proxy for demand, is way above the red line. So you had a very strong global demand impetus coming from a wide range of countries, monetary policy, fiscal policy, but supply response was extremely weak, and that's that red response. So for several years in a row, you get demand running well above supply. Some of that demand came from fiscal deficits. This graph just shows you what those fiscal deficits have looked like over time. The green deficit lines are columns are 2023. The blue circles are 2024. And then the red is the 2015 to 2019 average. And you can see that both for 2023, the green, and for blue, 2024, these fiscal deficits are well above those longer-term averages. So fiscal deficits are generally considerably larger than pre-crisis, and post-crisis, for many countries, they also remain quite a lot higher. Another reason for why inflation has been a bit more persistent is that we tend to measure things like Phillips curves over time, so the relationship between slack in the economy and the inflation rate. And as many of you will be aware, in the run-up to the pandemic, the literature and the analysts were all saying, well, the inflation, the Phillips curves for many countries has flattened. And the nicest way to see that is the left-hand chart, which shows you the US wage Phillips curve. And it basically meant that at various kinds of unemployment rates or vacancy ratio levels, it didn't seem like inflation was going to take off. But the blue line shifts up to the left after August 2020, and so the Phillips curve takes on a rather different demeanor and a different shape to it. And so it's less clear that unemployment is going to continue to put downward pressure on inflation. In fact, what this is saying is quite the reverse, that even at these unemployment rates, you're getting a small movements in unemployment rates, you're getting inflation rising above, and you get a similar kind of dynamic for South Africa shown in the right-hand graph. So all of this is leading to some comment about what has actually happened to global growth. This graph is just trying to show you that while global growth remains below long-term trends, and the long-term trends are those dotted black lines. On the left, it's the global economy. In the middle, it's the advanced economies. And on the right, emerging market and developing economies. But the point to take away from this is that over the past year, the estimations of global growth and growth in each of these components has changed. So we started with the green line, April 2022. This is the World Economic Outlook. And it was expected that growth would be relatively robust. As we saw inflation persist and policy rates were going to stay high, those blue lines we shifted down to the blue lines. So global growth was expected to fall quite a lot. But we ended up in the red line. So somewhere between the two, somewhat better growth outcomes than had been expected. So the analysis of inflation and its relationship to growth and its relationship to policy has been moving around quite a lot. So let me move on to South Africa now. For SA, of course, we sit with continued weak growth and inflation pressures. They remain. This graph just shows you this going back to 2010 over a long time frame. The dotted lines show you our forecast going forward. So on the right-hand side for 2024 and 2025, we expect headline inflation in blue to continue to moderate, and we expect real GDP to start to pick up.